everything unravels very quickly, when the confidence goes. And, that could happen in the United States. And so the government is under as much pressure to print money today in America as they were in Weimar Germany. And we can certainly end up with a similar outcome if we stay on the path we're on now.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
Hey guys, Rafi here from the End Game Investor, and I'd like to wish a warm welcome to all the people who found me through Canadian Prepper. I think that was a great interview. I had a real fun time doing it, and I think I got a lot of concepts off and help people understand what is going on in the monetary system. And once you understand it, it's scary, but it's also very calming because it all makes sense. Today's interview, I had the great opportunity and privilege to interview Peter Schiff, one of the gold and silver community's great men. The first silver order I ever made was through Schiff Gold back in 2012. And Peter has been around in the gold and silver space for many, many years. He's also a very funny guy. I put some of his comedy clips into this video just for some entertainment purposes. And if you want to buy gold and silver, what I did, my first order was junk silver coins, a junk silver coin bag that I bought from Schiff Gold. You can also get it with him. Or if you want to support this channel, you can call 855-GAME-END. I am an affiliate with MilesFranklin. And what Schiff Gold and MilesFranklin have in common is that they do not try to rip you off with high premium numismatic stuff. If you want numismatics, that's fine, but they're very high premiums and they're mostly art and not really bullion. They're art made out of bullion. But if you want just straight up money, MilesFranklin and Schiff Gold are great places to be. And you can support this channel by calling 855-GAME-END and making your order with them or with Schiff Gold. And of course, if you want to support what I do, you can sign up for a 2-week free trial of the End Game Investor, a daily market commentary focusing on gold and silver markets and monetary economics from an Austrian school of economics perspective, logically based. And if you want to get my weekly Bible or Torah lessons in monetary economics based on the portion of the week, then you can become a patron on patreon.com/endgameinvestor for as little as $3 a month and learn what was going on about 3,000 years ago on these topics. And there's a lot to say about it. Thank you, everybody, and enjoy the interview.
Bernie Madoff said, why are you guys even talking to me? The federal government, the U.S. government, is running the biggest Ponzi scheme in the world. The economists were saying, well, come on, that's Bernie Madoff. He doesn't have any credibility. Who cares what he says? Well, I mean, he's got credibility about one thing, right? Ponzi schemes.
Hey guys, Rafi here from the End Game Investor, and today I have the chief economist of Euro-Pacific Asset Management and the head of Schiff Gold, Peter Schiff himself. Thank you so much for coming on. I have been following you since 2008. I've been an avid follower for many, many years, and I'm also a client. The first major silver purchase that I ever made was with Schiff Gold back in 2012. And a short story about Schiff Gold. In March 2020, when silver was going down to like 10 and a half bucks in the panic, I called my father and I told him that he has to buy silver like right now. Like, you're not going to get these prices anymore. And he went, and I told him to go to Schiff Gold. And that was the point when gold and silver orders were like overflowing and companies were having a real problem fulfilling orders and everyone was going crazy and like the phone was ringing off the hook. Well, it took a while, but the customer service guy at Schiff Gold got him through the order, and he completed the order a few weeks later, and it was fulfilled. Everything came out at the price that he got it at. There were no hitches except for a little bit of a delay, but we were very impressed, and it was a great experience. So thank you.
Oh, that's nice to hear. Always good to get positive feedback and satisfied customers.
So Peter, my first question, you said, I don't know if you remember saying it, but you said just as a descriptive comment, the dollar isn't money, it's a money substitute. And for some reason that kind of clicked in my head and I understood something and I wanted to get your feedback on it. If the dollar is not money and it's a substitute, it's a money substitute in your words, then what is it substituting for, right? So it has to go back in time every day by day by day because we agree on the value of a dollar only because we agreed on it the day before. And when the dollar was born, it was a stamped coin that weighed $1 for gold or silver, right? So it all goes back to that. So my point is that a lot of us in the gold and silver space, we say the dollar went off the gold standard. Maybe statutorily that's true, but in a monetary sense, I would say that we haven't gone off the gold standard because the gold standard right now is at $2,000. That is the gold window. And my theory or my way of thinking about it is that if we are to go off the gold window, meaning if the dollar and gold are not exchangeable at all, that is hyperinflation because the original link that gave the dollar value in the first place is gone, and that is hyperinflation. What do you think of that way of seeing it?
Well, it's partially correct, but there's no longer any link really to what we call the dollar and gold. Now, what we call the dollar is a Federal Reserve note, but it's not even a legitimate Federal Reserve note because a note promises to pay something. Now, once upon a time, when the Federal Reserve began in 1913, the Federal Reserve notes did promise to pay something. They promised to pay dollars. What was a dollar? A dollar was defined as a weight of gold or silver. So Federal Reserve notes were liabilities of the Fed where they promised to pay the bearer on demand real dollars. But those Federal Reserve notes could circulate in commerce as a medium of exchange, as a substitute for those dollars. That's why they're a money substitute. Currency, by definition, is a money substitute. It's currency backed by real money because real money has to have intrinsic value. That's one of the properties that money has to have. It needs to be a store of value. So a piece of paper doesn't store anything. What gave the Federal Reserve notes value is the fact that they represented ownership of real money, dollars, that were a defined weight of gold or silver. When the Federal Reserve note initially came out, $20 was 1 ounce of gold. That's literally what it was. And so if you had a $20 bill, it was a Federal Reserve note that obligated the Federal Reserve to give you 1 ounce of gold. It had a coin, like a US government coin that it minted, and you got that for your 20. But now you don't get anything. If you have a 20, they'll give you two 10s or 4 5s, but you're not going to get any real money. You're just going to get another piece of worthless paper. Now, ever since we went off the gold standard officially in 1971, and those Federal Reserve notes were just worth whatever the market would bear, people still ascribe value to Federal Reserve notes because other people will accept them in payment for goods and services. And of course, the government requires that taxes be paid in those notes. And so since most people don't want to go to jail, they need to accumulate these Federal Reserve notes to pay their taxes. And so that's basically what the system is built on. It's built on confidence and government force, because the government forces us to pay taxes in this currency. You can't pay your taxes in anything else. Even if you have gold or silver, or if you have euros or Swiss francs or Japanese yen, you can't pay your taxes with those currencies. The US government doesn't accept them. You have to sell those currencies or sell that metal to get dollars, Federal Reserve notes, and then you can pay your taxes.
On that conception, I just want to go a little bit further on this point, and then we'll go to a different topic. A hyperinflation, when they happen, right? It's not that Weimar or the government in Germany suddenly no longer had the ability to force its citizens to pay taxes, right? The dollar lost value, and then they lost their power to collect taxes. So, I mean, what's really coming first here?
Yeah, well, that's the fact that you need dollars to pay taxes is part of the reason that everybody wants dollars. But the other reason, again, is confidence in the future value. The belief that somebody will want your dollars, other than the government, in payment for their goods and services. And so once confidence is lost in a currency and people no longer have, are no longer willing to hold on to that currency for any length of time, because they're worried that the longer they hold it, the less it will buy. And you get to a situation where people want to spend the money as fast as they receive it, right? So the velocity just picks up. Like the minute you get money, you try to get rid of it. You don't want to hold it for any meaningful length of time, because while you're holding it, it's going to lose value, right? Prices start to rise, and it just spirals out of control. And you'll hear the stories like, with this hyperinflation, if you wanted to go to a restaurant, you'd have to pay for your meal in advance, because if you waited for the bill, the price would be a lot higher. And then, of course, the restaurant, the minute they got your money, they would be spending it before you even finished eating, because they didn't want to get stuck with it. They'd use it and go buy some more food. I mean, it's a very different world, but everything unravels very quickly, when the confidence goes. And, that could happen in the United States. It's the same. Our money is the same as the Reichsmark. And the reason that the German government had to print so much money was because Germany at the time had a lot of debt. It was a lot of reparations that they were required to pay as a result of the Versailles Treaty to the nations that had defeated them. So they had to pay Great Britain, they had to pay the United States these war reparations. So they had this big debt, and they didn't have the money, so they just printed it. But if you look at the United States, we're in a similar situation. And so the government is under as much pressure to print money today in America as they were in Weimar Germany. And we can certainly end up with a similar outcome if we stay on the path we're on now.
Yeah, we saw what happened in Weimar, and pretty much every hyperinflationary economy that's ever existed. I mean, if you look at the price of gold as that's happening, it heads to infinity, which doesn't mean that gold is infinitely valuable. It never is. It just means that the currency is zero. So you divide by zero, you get infinity.
And the price of gold, probably approached infinity in Zimbabwe. I don't know how many Zimbabwe dollars. You needed trillions of Zimbabwe dollars to buy one US dollar. So you needed a lot more to buy an ounce of gold. But yes, if you look at where the price of gold was when the Federal Reserve came into existence, you needed $20, 20 Federal Reserve notes to buy an ounce of gold. Now you need almost 2,000. It's 1,900 and change, but let's just call it 2,000. That means that the dollar or the Federal Reserve note has lost 95% of its purchasing power. No, 99% of its purchasing power, because you need 100 times as many dollars to buy an ounce of gold today as you did when they established the Federal Reserve. So that equates to a 99% loss of value. It's not that the price of gold has gone up. No, the price of gold is really the same as it was 100 and some odd years ago. It's just that the dollar buys that much less gold. It's the dollar that's lost value. Gold hasn't gained it. Gold has just retained it.
Yeah, that's exactly how I think about it. When you're talking about hyperinflation in, say, Weimar or any other country, do you really see, and I do see it this way, but I want to know what you think. Do you see that playing out as the inevitable outcome? What's the other option besides the dollar going to zero? What's another realistic option? They suspend it at a certain gold ratio, but then we're talking about like the entire pyramid all the way back from 1933, not even 1971, because the way I see 1971 is it wasn't really like if we disagree, fine, but it wasn't really going off the gold standard in my head. It was more like Nixon admitting that I can't really fulfill this at 35. We're just going to let the free market decide what the thing is. But what's the other option besides hyperinflation? What can the U.S. do, and what's going to happen then?
Well, hyperinflation is not inevitable, and I would still think that it's more likely that we won't end with hyperinflation. But I think that there's going to be very high inflation. There's no question about that. So the dollar won't lose 100% of its value, but it could lose 50% of its value very easily. It could lose 70 or 80%, or maybe even 90% of its value without going to zero. But in order to prevent the dollar from going to zero, eventually the government is going to have to do the right thing. Now, the longer it waits to do the right thing, the closer to zero we're going to come before they finally do the right thing. But doing the right thing is going to involve a lot of, short-term pain, although we're probably going to have a lot of short-term pain before they even have a catalyst to do the right thing. But, they're going to have to let people lose money. They're going to have to let companies fail, banks fail, depositors lose money. They're going to have to be honest and cut benefits like Social Security and Medicare and government pensions and cut national defense. They're going to have to act fiscally responsibly, something that they've never done. And the reason they don't want to do it is because the voters don't like it. Well, they're not going to like massive inflation either. But at some point, if we want to prevent, hyperinflation, which would be the worst possible outcome, then politicians and the Fed, they're going to have to do the opposite of what they've been doing. And that is, act responsibly. So interest rates need to be much higher than they are now. And that means a lot of debts are going to go into default. And a lot of people are going to lose money because they can't get paid, whether they're private creditors or whether they're creditors of the government, whether they loaned the government money and bought a treasury bond, or they've just been promised a benefit like Social Security, Medicare. Everybody is going to have to give something up. There's going to have to be a restructuring of all these liabilities because there's no way that the government can pay them. The only way they can pay them is with massive inflation, which means you don't get paid anyway. You get paid money that doesn't have much value. So I think people will be better off getting 50 cents on the dollar, but the dollar still has value, than getting 100 cents on the dollar where the dollar has no value.
The way that I think about hyperinflation, I understand, I very much understand why it would be a catastrophe in many different ways. And a lot of people would be in a lot of pain. I don't deny that. But don't you think it would be better? Meaning, if you look at the amount of corruption that is spiraling in every sector of the economy, not just in the financial system, but in education, in the censorship that we're seeing, in medicine, in academia, it's all there. And I'm not going to go into details. I'm pretty sure you know what I'm talking about. But if we do have hyperinflation, I mean, all of this corruption is being funded by the inflation itself. Like the let's say in medicine, Medicare, like the pharmaceutical companies get money from Medicare, which is printed by the Fed and handed to the Congress, or in education, student loans printed by the Fed, handed to the Congress, handed out to the student. It's all inflation. So if we do have hyperinflation and this all ends, right, then wouldn't it be that all this corruption funded by the inflation stops, and then we can rebuild something that makes more sense? I mean, how else are we going to get out of this? All of this crazy corruption everywhere.
Well, yeah, look, we're not going to get out of this without going through a painful restructuring. The pain won't be evenly distributed. Some people will feel it more than others, but it's going to happen. It's like if you are a drug addict and you decided that you want to come clean or, get, sober up and kick the habit, and you're going to, go to a rehab, you're going to have a tough time there. Your body is going to go through a difficult experience in detox, right? It's not fun. Your body became addicted to a substance, and you remove that substance and your body reacts in a certain way. But you have to get through that period and come out the other side where, the addiction is gone, right? You got to go through that pain. Well, the economy is the same way. We've been addicted to cheap money, inflation, artificially low interest rates, excess consumption, and all that has to go away. We have to allow the economy to restructure in a healthier way. But the transition is tough. The other side, yes, we're going to have a much healthier, more resilient economy. And eventually, people's lives are going to get a lot better. But between where we are and where we need to be, there's a lot of, pain there because a lot of people are going to lose a lot of money, and that, people are going to lose jobs before they get new jobs. And so, but this has to happen because the longer we delay this, the worse we make it. The fact that we've succeeded in delaying it for as many years as we have already has made it much worse than it would have been had we addressed these problems, 5 years ago, 10 years ago, 20 years ago. The longer ago we would have addressed them, the healthier we would be now. And the less painful the adjustment process would have been. I mean, Nixon should have done it. Nixon in 1971, that was really a key point.
We will press for the necessary reforms to set up an urgently needed new international monetary system.
That's right. I've sent you each 300 buckaroos in the form of a tricky dick fund bill. Knock yourselves out!
Where Nixon could have done the right thing and stayed on the gold standard. And he could have devalued the dollar a bit, but stayed on the gold standard, cut government spending, told people we can't have guns and butter, We're going to have to cut back on some of this spending from the Great Society and, these programs. But no, he chose not to do that. And, here we are 50 years later, the problems are much worse because back in 1971, the U.S. was still the world's largest creditor nation. Now we're the world's biggest debtor nation. Back then, we had huge trade surpluses. Now we have massive trade deficits. So all of this is the consequence of, 50 years of kicking a can down the road.
Mm-hmm. So about 1971, this is another thing that you taught me listening to another one of your podcasts. I didn't know that it wasn't really 1971. It was 1973 because he moved gold, or Nixon or whoever was in charge of it moved gold from 35, and they tried like 38.
But then no, that was actually, I think that was before 71. I think they devalued before 71 is when they just said, okay, that's it. Because by 1971, I think the price of gold had risen to $42 and something. I think the devaluations happened first, and then he was just like, "That's it. I can't. We got to just cut the window because they were going to have to devalue again because they didn't devalue enough. That was the problem. Mm-hmm. And so since they didn't devalue enough, people kept wanting their gold because they knew that the dollar would keep depreciating against gold. So people wanted the gold. They didn't want to hold the paper.
Okay. So a little bit more on that idea. If you look at the Fed's balance sheet today, there's a whole bunch of paper on it, mortgage-backed securities, treasuries, trillions of dollars worth of that stuff. And then they have this like gold certificate account of 11 million, whatever, or 11 billion, whatever it is. And they value the gold on their balance sheet at 42.22, right? It's this like weird fiction that we don't know why. Like it's hard to understand. Like why would they value gold at 42.22? What do you think?
Well, that's the official price. That's where it was when we went off the gold standard. But again, it was Roosevelt devalued it the first time in 1933. So it was $20 an ounce, and then Roosevelt devalued the dollar and raised the gold price to $35 an ounce. And it stayed at $35 an ounce until Nixon. And that's when he devalued it to 42, whatever, and change. And then we just abandoned the gold standard. And so they've never devalued since. I mean, if they wanted to be honest, they would say that it's 1900 because that's where it is now, right? 1940 or something. But we're pretending that the gold is only $42, even though the market shows that it's a lot higher than that because they don't want to have to officially devalue the dollar that much. They just ignore it.
What do you think happens the next day or the next week if they actually did that? If they said, because we heard something about the European Central Bank or somebody from the European Central Bank saying, well, we have a gold revaluation account, which I assume means we're going to take our fictional valuation of gold on our balance sheet and just push it up. What happens if they say, okay, not 42.22, we're going to go with the market rate? The way I think about it, and I might be wrong, is that if the statutory rate is like 1900 or 2000, then the market rate moves up by a factor of like whatever the difference is between 42 and the current market rate. It goes to like, I don't know, like 20,000 or something like that. Does that actually happen, or what?
I don't think it would have any real world consequences because the Fed doesn't have any gold on its balance sheet. The only gold is in Fort Knox, and that belongs to the U.S. Treasury. And I mean, it doesn't really matter what they want to claim it's worth. We don't even know how much gold is still there. But I don't think it's going to matter to anybody at this point, if we, just officially devalue the dollar to the current market price. Mm-hmm. But, even if we do that, it's not going to last because the dollar is going to keep depreciating because we keep printing them. Our deficits are over $2 trillion a year right now. Our budget deficits, our trade deficits are over $1 trillion a year. So mm-hmm. we have these trend deficits that are growing really exponentially now. So, the dollar is just going to keep falling. And so the gold price has to keep rising.
What you said about the only way to prevent hyperinflation is to become responsible. So if I cycle that through how these financial crises seem to play out every time, right? There's this dollar crunch and then the banks scream and then there's like this banking crisis and everyone's freaking out. And then the Fed makes an announcement that they're going to do X, Y, Z and print all this money. What's going to happen is we're going to have to go through one of these crises where everyone's freaking out again. And the Fed's going to have to be responsible and saying, look, I'm not bailing you out this time. how is
that's
that
what the
going to work?
markets.
Yeah.
That's not going to go over well because the markets are used to the Fed coming to the rescue whenever there's a problem. And so in order to stop this, the Fed is going to have to tell everybody who's been expecting a rescue, right? It's like the cavalry ain't coming. You got to deal with these Indians because we're not coming. And yeah, that's something that nobody is prepared for because, they rescued everybody after 2008. They rescued everybody with COVID. They rescued everybody from this spat of bank failures earlier this year with Silicon Valley Bank and Signature Bank. And so they came in, printed a bunch of money, backstopped all the losses. That's what investors expect. That's part of the moral hazard because investors take a lot more risk because they believe the government's got their back. They don't think that they can lose because they think if they are losing, the government's going to come in and turn it all around. So they are very aggressive in what they're doing. And they're in for a rude awakening when they get fronted with reality.
Are you worried of a breakdown in law and order if that eventually happens, if the Fed doesn't come to the rescue and the US does the right thing? I mean, I could see the division of labor or parts of it breaking down, different parts of the country, different parts of the world. How do you keep calm with these thoughts? I mean, I try to keep calm.
I mean, absolutely, that's going to happen. I mean, we're already seeing a breakdown in law and order now. I mean, look what's happening to the cities and the crime wave that's been going on with shoplifting and all the things that are happening now. And things aren't even that bad. I mean, yeah, I mean they're bad, but they're not the way they're going to be. So when you're talking about hyperinflation or just very high double-digit inflation, where the government ends up instituting price controls, which they very well may do. In fact, I think that's pretty likely. And once they institute price controls, that means there's going to be shortages of everything. And that means they're going to have to ration things. People are going to be waiting in long lines to buy, basic necessities. There may be rolling power blackouts as we have to ration power and things like that. In that kind of environment, I think crime could just explode. In this country, given where we are now. So yeah, I mean, it is a concern of mine, and everybody should be concerned about how much crime there's going to be. And you better be prepared to defend yourself. Don't rely on the police because they're going to be too busy protecting their families, to try to protect yours.
Mm-hmm. Okay, so I have one more question, and I mean. You and your family. I mean, your father was a great man, and you're following in his footsteps. A little bit less extremely. You kept out of prison, thank God. But now your bank, which is probably the only bank that was actually honest in the world, like Euro Pacific Bank, treated you completely unfairly, and everything that I've read the stories and it's infuriating. And what they did to your father.
The best article to read is the one that came out in the Daily Wire. It was a really good expose about. Did you read that one? It was like a month or two ago. I think it was July. It came out, or.
Send me a link and I'll take a read.
Well, you just gotta just look for it, or if you go to Google and you Google Euro Pacific Bank and you do it by date. The title is like the government can destroy anybody or something, but it's a very comprehensive article. The reporter, Luke Rosiak, he spent a lot of time researching it. He reached out to the IRS, reached out to, OSIF, reached out to the bank receiver. Of course, nobody would talk to him because they all know that their conduct was unforgivable and illegal. But basically, in a nutshell, just to give you like the Cliff Notes version of what happened. So in January of 2020, I guess the IRS or the J5 decided that they thought my bank was helping criminals and other people launder money and evade taxes. I don't know why they thought that. Maybe it was just me and the fact that I'm my father's son, or the fact that I'm a vocal critic of high taxes and regulations. But they thought, hey, this guy Schiff owns a bank. Maybe he's breaking all these laws. Okay, now if they thought that and they would have kept it quiet I would have had no problem with it. And they began their investigation in January of 2000. Now, somewhere along the way, somebody in the US government or in the Australian government, I don't know, illegally leaked all the details of this confidential grand jury investigation, which itself was a farce because they actually started investigating my bank out of a Sacramento grand jury, even though we had no nexus to California. We didn't even have any American customers, at all of the bank. So the whole grand jury investigation was a fraud. And they lied to me. They told me they were investigating customers. They said we weren't investigating the bank, but they actually were. But anyway, along the way, they leaked the investigation to the media, right? To 60 Minutes Australia, The Age, the Sydney Morning Herald, and the New York Times, right? They said, hey, we're investigating this bank, and we think they did all these bad things, right? And by the way, this is the biggest investigation in history. 5 governments are involved. We think this is the biggest tax fraud, money laundering scheme ever, and we're closing in on them, and we're doing this, right? So then 60 Minutes comes out with a big story, followed up by the New York Times and The Age, outing this investigation, saying Peter Schiff is the mastermind behind this massive scheme. Organized criminals have been using his bank to evade their taxes and launder money. It's huge. It's a massive criminal threat. And, the government, these super cops are taking him down, right? They come out with this. Now, after the stories break, my bank is in trouble. I mean, people are scared to do business with me. 75% of our deposits were withdrawn in the ensuing year and a half. 75%. But because my bank was 100% reserves, we were able to meet these redemptions. We didn't make any loans. No other bank on the planet could have had 75% of their deposits withdrawn in that period of time and not filed for bankruptcy. But I was able to do it. But also, one of the reasons that all these customers wanted their money back was because all of my key counterparties refused to do business with me because of the reputational risk. So we lost our deal with American Express, with Visa. We lost a few banking relationships. We lost our Fed account. Our auditors quit. I mean, we couldn't run the bank because everybody was afraid of being associated with this bank because of what I had just been accused of. Now, the investigation went on for over 2 years, and they found absolutely nothing, right? They didn't find any evidence that the bank did anything wrong because we had an excellent compliance program. We did great due diligence and KYC. 75% of the accounts that applied, for my bank got turned down. I had 65 employees in the bank. 30 of them worked in compliance. 45% of my employees were in compliance. That tells you how ridiculous it is. I only had one person in marketing. That's it. One guy that did marketing, 30 guys that did compliance. So, we were certainly following the law, following the rules. Now, because my bank lost so much money, I had to sell it. I couldn't operate it anymore because nobody would work with a bank owned by me because of the allegations in the media. So I got a sale to a company that's now publicly traded. They're based out of Houston. They're on the NASDAQ. They were going to buy, they were buying my bank. They were going to take it over, rename it, expand it, new president, new board of directors. I was just going to be out of banking because my banking career was pretty much ruined by the fact that this happened. Well, during the 9-month review process where the local regulators were vetting the buyers just to make sure that they were qualified to own the bank, right? The IRS must have done something to pressure OSIF to shut my bank down. Meanwhile, I had filed a lawsuit in Australia for defamation, which I've won, and I'm just trying to get my damages, which unfortunately will be tiny compared to what I lost. But what happened was the IRS got OSIF to shut my bank down, put it into receivership, turned down the sale, right? I had this buyer lined up, and they said, no, you can't buy this bank. We're not going to let you buy the bank. We're going to put it in a receivership. They said because the bank was insolvent. That was the reason given. It was insolvent. But it wasn't insolvent. And the buyers, if it was insolvent, the buyers were going to change that because they had to put in $7 million in capital to close the deal, which was, more capital than we needed to get to the regulatory minimum. But even though I was below the regulatory minimum, I still had about 2 or 3 million in capital. So I wasn't insolvent. And the reason I had less than the regulatory minimum is because the regulators told me I didn't have to put it in. They said that, you're selling the bank, so just let it be sold and the buyers will put it in. So I was simply waiting for them to approve the sale, which they had indicated they would. But the IRS wanted to be able to claim credit for like shutting my bank down. So they come down, you can watch. I put the whole press conference on the internet, on my YouTube channel. So the IRS agent comes down to Puerto Rico, the top criminal investigator in the Internal Revenue Service, and the number 3 guy, right, at the IRS, this guy named Jim Lee, comes down to Puerto Rico, gets all of his buddies from Australia, the UK, Canada, the other J5 nations. They all come on, and the OSIF commissioner announces that my bank is being closed. I didn't even find out about it until an hour before it happened. But the media was alerted a long time before me. My lawyers didn't know. Nobody knew except the media. And they come down and they say, we're shutting down this bank, and then they introduce the IRS agent who comes on and talks about how this investigation started in January of 2020 because they thought my bank was facilitating tax evasion and money laundering and doing all this stuff. And now they're so glad that it's being shut down because we're sending a great message that we're not going to abide. We're not going to sit back and allow tax evasion and money laundering. They made a big deal about it. But when the reporter asked the OSIF commissioner, well, did the bank help the customers evade taxes and launder money? She said, no, we didn't find any evidence of that. We're just shutting it down because it's insolvent. but it wasn't insolvent. They said, we're putting it into receivership to protect the customers. So the customers didn't need any protection. Now, wait, my bank has been in receivership for more than 14 months, and not a single person has been able to get one nickel out of the bank, even though it's all sitting there in cash. But meanwhile, after they did this, all the newspaper reports were that bank was shut down as a result of money laundering and tax evasion. Investigation of this bank, caused, of tax evasion, money laundering, the bank was shut down. But it wasn't shut down for that reason. It was shut down for a made-up reason. Right. So it's basically what the government did is they illegally leaked the investigation to the media,
ruined your
claimed I
reputation.
was guilty. Yeah, which claimed I was guilty. The leak basically destroyed the bank so that it eventually had to go out of business. But then the government decided to come out and pretend I was guilty, even though they knew I was innocent. Anyway, that's the story. So it was a complete disaster. I don't have the bank anymore. My main business, if anybody wants to work with me, is Euro Pacific Asset Management. I don't have the bank, but I manage money for people. I build portfolios of stocks around the world. It's not just gold. I think you want to buy income-producing foreign stocks that will keep you ahead of inflation, real businesses with real income outside the United States. And you don't have to worry about the government shutting my bank down because they don't have the jurisdiction. And, we don't hold the deposits. Like the bank, we held your money. I hold the money through third parties, through Fidelity, through Interactive Brokers. So none of the money is with me. We just set up these accounts and then I manage them for you. And you can also buy my mutual funds. My mutual funds are on all the major wirehouse platforms or discount brokerage firm platforms. I've got a gold fund, an emerging market fund, an international value fund, international dividend payers fund, and an international bond fund. So you can work with me that way to avoid this inflation tax, which is going to be horrific either way. I mean, if it's not hyperinflation, it's very high inflation, and you have to protect yourself.
I'll put all the links in the bottom of the description. And thank you so much for coming. I wish you a Shana Tova, a happy New Year. Rosh Hashanah is next week. Have a great holiday. Yes. And again, I'm so honored that you came and gave me your time. And I hope to see you again soon.
Yes, thanks. And happy New Year to you too.
Thanks.
Right. So I get a letter from this pornographer. And he says, I'm a big fan of yours. We want to shoot a movie starring you. My porn name would be Peter Stiff. My first movie would be Peter Stiff in Ball Street. It's not just his money that's hard. But I thought about it, and I realized that it's probably not for me.
Nixon's back!
Morbo congratulates our gargantuan cyborg president. May death come quickly to his enemies.